Right. 17:02. Time of recording. Looking at Friday's move over here. I was personally in longs from the 4564 handle, simply because on Thursday, London session left downside discovery. If you look at the first high, 1, 2, so 815, the downside breaches were pending. Okay, so price acceptance was on standby. Now, London set, so Thursday's London, yeah, set itself up for Friday's London. We could look at London and London mirror move, could do that as well. But the explosion into 4650s simply was based off Tuesday's Asia and London inventory transfer that was left behind for Friday. So, you know, Asia's first high is over here. Now, Asia left upside discovery. Okay, Asian session unresolved inventory. So if we just get the fib from, and I assume all of you are familiar with the fib, but if you get the fib from Asia low and Asia high and you drag it across the grid, and look at the candle that broke the 1.27, okay, and obviously all of that aligns with the previous session's inventory transfers as well. If you look at the candle, this candle at 13:30 when NY cash desk opens, it breaks the 1.27, line the crosshair up over here, and just the NY handover 2:30 NYC opens, push. We came shy of the 50 level, okay, and the move popped from the 590s based off that 1.27. So when I was looking at this price action here, okay, I was looking at New York and Asia's relationship here, where New York low is protected because Asia didn't print any delta. So there wasn't any, what's it called? There wasn't any buy side liquidity. Okay. Sell side liquidity, yes, price running into sell side stops, yes, but there wasn't any buy side liquidity, and Asia didn't print Asian delta, so NY low remains protected. Asia's obviously protecting NY's low. Okay, London prints delta over here, 10:30. So if you see these see-through rectangle boxes that I've drawn, these are deltas, okay, and I've shared that over here on case studies. The specific candle, yeah, delta footprint identified 10:30, what sort of liquidation it is, and the footprint chart supporting the evidence. So London delta printed. New York doesn't respect London's delta, even though upside discovery was completed. Asia opens up. Asia prints a delta, okay, but this delta is for the upside push, long inventory. Because if you look at New York short, so New York down, Asia's delta sits at 115. Discovery is to the downside. Obviously, that is very evident over here. You can see Asia's delta was used in the opposite direction to go into discovery. With the whole delta stuff, you can use, you can arm delta when it comes down to trading towards the reference point, so the raid towards New York high, or you can use it into discovery. I took shorts during Asia into discovery. I woke up, price was around here. I see London breaching lower, completing Thursday's inventory balance. So London basically balancing its own sessions books. Then from here, yeah, push, push. Okay, I got myself from here, and I held the trade. You know, I was in the gym, and I see 1330. You know, break below 1.27, push. Now this push, you know, is into so London high, London low, line the fib up, runs into the 1.18. You know, A to B, A to B, A to B. Okay, so from 1.18 back into 50 level. New York session has left downside breaches behind. So the session high sits at 14 and 14.15. We need at least a breach 1 or breach 2, okay, for the auction market to accept 4,590 before moving higher into 4,700. Why 4,700? Okay, upside discovery pending for Asia. Until we don't get 4,700 cleared, downside is limited. Okay, downside is limited. New York and Asia, yeah, both sessions set themselves up for FOMC. London and New York, both sessions set them up, you know, set themselves up for Fridays, London and New York. Okay, it does take a while to, you know, sit on your hands and just wait for the moves to come through. For example, this Asian move, it happened overnight, so you would have had to either, you know, get involved as soon as the market reopens, or wait until Shanghai Exchange opens from 2 onwards, and then, you know, go into discovery, sleep for, let's say, because I took shorts from 12. I took shorts over here, you know, 4,630s. Kept my stops above London high, sorry, New York high, because New York high remains protected. So this was over here. Okay, it was like this. My shorts, I think I shared it somewhere here. Yeah, took shorts Thursday, New York Delta high, probe 1 and price followed. I actually shared this on Reddit as well. And a few of the guys on Reddit were shorting gold, and I told him, look, Asia will deliver the discovery. London will set itself up for the move, and NY will carry it. You know, so obviously I've pre-planned the entire move beforehand, simply by reading session inventory transfers. You know, it wasn't nothing on the spot. You know, I'm very proactive in the markets when it comes down to knowing which sessions require, you know, knowing which session is going to be the delivery session. I think that's the crucial point over here, is understanding the continuous auction. You know, so the space from, let's say, 4,590 to 4,700, that's 1,000 pip range from here to here. So it's gonna be a multi-session push into 4,700. There isn't any downside unresolved inventory. Okay, all the downside unresolved inventory has been cleared, in my opinion. I've had a look, and it all has been cleared. And now it's simply a matter of time. This move was an intense move. It was, so from here, from London lows, it was just shy of 1,000 pips, so 900 pip move, and I held it all the way up until 4,650s. I was also gonna go shorts, but since I was outside, I wasn't on my desk, so I couldn't take shorts. The main distinction of it is that we've got Asia and London inverse. Okay, now London didn't print any delta, so London wasn't able to clear Asia high. So this was a force raid. because Asia high remains protected. So this was a clean force raid. Okay, it wasn't meant to happen. Yeah, according to Asia and London Delta play. But if you look at the bigger picture, you know, it was necessary. Yeah, because New York left unresolved inventory. Okay, New York left upside breaches. Asia left upside breaches. London on Tuesday left upside breaches. So this move here, 1500 gold fix push, you know, it pretty much resolved one, two, three sessions unresolved inventory. Yeah, so one candle, three shot, three birds, you know. Good move. And now we move on. So the cycle on a weekly basis, they would differ depending on, you know, like some you know, some weeks we may have midweek reversal on a Wednesday, and price can actually reverse. You know, Wednesday last week, price did reverse as per midweek reversals protocols. Cool, fair enough. And then some Wednesdays there won't be any midweek reversals. You know, it could be a huge Monday move, or it could be a huge Monday dump. So it all depends. With gold specifically speaking, buy the dips, buy gold dips. The reason why I say this is it took the gold shorts were short. They were not sustainable. It lasted for 7 days, literally 7 days. Look at the 4 hourly. You know, week 1, 5 days, okay, and then Wednesday, 6, 7, well, just shy of 8 days, okay, 7 to 8 days, and it was a 3,000 bit move, okay, 3,200 in the space of 7 days, but the pullback in the space of 2 days was almost 50%. You know, so 6% drop and then 3.4% pullback. That should tell you one thing, that we are in a bull market. You know, we are not in a bear market overall. Obviously, a lot of people would be looking at this in terms of, yeah, you've got a intermediate, you know, trend. You've got a counter. You've got some sort of counter trend line over here. Yeah. And I think a lot of people are targeting for 120s. But don't mistake yourself. There is no downside discovery pending over here. Okay. There is no downside discovery pending over here. So week 1, 2, 3, 4, 5. Okay. There's not a single downside discovery pending. Whereas if you look at last week, over here, 1, 2, delta sits at 1800. We have upside discovery pending. So any pushes lower. So if the auction market decides to, you know, push lower, it's gonna quickly pull back. You know, and we saw that over here. One candle push, pull back, 1, 2. You know, so that should tell you that you should always buy the dips on gold. Feel free to hedge shorts, yeah, especially if you're holding shorts from, let's say, the last week of March and the first week of April. Yeah, it's totally fine, but do hedge your shorts, you know. Back to the 15-minute sessions. Okay, I've always kept my sessions set up the same. Nothing has changed. I've only implemented the footprint charts, and I've also implemented the whole delta play, which took me around 4 or 5 months to merge it with my trading strategy, my trading style, especially how the bullion desk operates. They operate on a inventory base. Okay, every session will leave, well, not leave, but the majority of the time, a session will not be able to print its first high, first low, breach 1 and breach 2. You know, it's gonna leave something behind. So if you look at London over here, its first high sits at 815, breach 1, breach 2. Okay, line the crosser up to Thursday's session low. Yeah, breach 1, breach 2. This XS1 was used. So my entire focus the Friday morning was here. 4, 5, 6, 6. How is price reacting over here? Not just by looking at candlesticks, but I was also looking at the footprint charts, which I haven't loaded up right now, but it's on a different platform. I was observing the footprint charts and I was looking at how, you know, how sellers are being absorbed by buyers. And as soon as they got absorbed, price started to lift off, you know. And all of that was, you know, to be honest with you, it was all evident on the footprint charts. And I think next time what I'll do is I'll have the footprint charts open. Let me see if I can just pull it up right now. So the sellers got absorbed over here. Okay, Delta was bullish. Okay, buyers were taking control, and we saw the outcome. This move from here to here was just shy of 400 pips. Like I said earlier, 1.2712. We've remained below that breach. See? Push, push, push. 3 candles clearing late sellers. And then we had, you know, selling activity get involved. By the way, there's a huge bulk order added at 1915. So what I can do, we'll bring this over here, side by side. I'm going to show it to all of you. So 1915, yeah. That's 197 bulk order placed at the top of the 1.18 stab. That's one institutional direction. So anyone that tries to short gold in this short-term rally to the downside, they're going to get trapped easily. Okay, look at the POC, point of control. Okay, the point of control sits here, large bulk trading happening at 4,660s. Okay. Look at this. From 11 onwards over here, yeah. So we had that push to the downside, back above the candle, the excess candle, that breach excess candle. So 11 onwards, look at the delta shift from negative delta to positive, positive. So 1, 2, 3, 4, 5, 6, 7, 8. Delta shifted straight to positive. And guess what? Buyers were able to lift price. You know, and this is where the footprint comes really handy. You know what I mean? You don't necessarily have to rely on the footprint by itself, okay? But you can just look at it and have a glimpse and just read the delta itself. Look at the delta over here. Okay, delta was already positioning itself. It's pushed to the downside here before this candle, 10:45. Look at the delta. Positive, positive, positive. 1, 2, 3, 4, 5. 5 positive deltas, yeah. Up until that final push, sellers trapped. Look. 1, 2, you know, okay. Aggressive shorts hitting the bid side. And then the POC buy side. POC sell side. But the buyers were able to absorb the sellers. And then price started to push. You can see aggressive, you know, buying hitting the ask side. And this is where the footprint charts really can assist you in some sort of, you know, I would say confluence to what, you know, whatever you're looking at. Is if you're looking at, let's say, whatever strategy you have, you know, if you are just relying on candlesticks, you are missing out on, you know, key valuable information which you can take here with you. You know, equip yourself with the footprint charts And then you'll see, you know, you can see how the volume was quiet. Ask bid was quiet, yeah. 398, 354, 370, 715. As soon as 130 hits and my cash desk opens at 130, you can see that the volume surged. Okay, sellers started to take over, or minus 253. 1k bid, ask 750. So there was a difference. Okay, delta negative. Okay, cool. Delta negative, delta negative, delta negative. Yeah, 1, 2, 3, 4. We're seeing sellers involved, but the 130 candle broke the 1.27. Yeah, broke the 1.27 here. Look, broke the 1.27. Footprint is clearly showing, sellers are driving. This is sell side area, but they are not able to push price lower. You can see price stalling 1, 2, 3. Okay, when you see price stalling, look at this candle, push 1, 1, 2, aggressive push straight into 1.18, wiping out all those sellers. This is a textbook trade, by the way. It happens on a daily basis, And then you can see the bids and asks start to climb. 1k, 1k, 2k, 2k, 3k, 3k, 2k, 2k, 1k, and then so it does help. It does help. You should use footprint charts. I've modified this, by the way. I've had to modify this so many times because I kept losing my settings. I've saved my settings, kept losing it. So, anyways, and you can also scan for large bulk orders. Just like I did over here. 197, and if you do the math, I'll show you the math here. Okay, the math is 197 times that by 100 ounce times that by current market price, 4672. That's 92 million buys sitting over here at 4672. And the last time I saw 197 was a couple days ago. Okay, when you have one large block sitting, especially over here, the highs, don't assume that it's one directional sort of firm, or collectively multiple firms involved, or multiple institutions involved are just going to get stopped out. That's not how it works. They've got a huge risk appetite. So for them, this is what, just 1%. It's pennies. 1% is pennies for them. And it's just a way of. Got 96 over here, 314 at 1600. Okay. I'm not really gonna go into the more in depth as to how the volume metrics operate. That is just for another recording and all of that stuff. But yeah, I recommend all of you to study the footprint charts and then add it to your trading. See where you can improve. See if the way I read inventory is based on footprint and TPO, which I do have over here, but my settings are gone for TPO, so I need to re-add TPO and the volume profile too. Okay, I recommend that you go based off session inventory. Any asset class, doesn't matter, not just gold. I'm talking globally speaking. If you trade, for example, I think it's if you trade, let's say Nasdaq, you should be looking at E-mini futures, Dow Jones, and all of that stuff. When you're looking at a decentralized asset class, you have to really look into a centralized exchange. Look at where the real volume sits. Look at where the bids and asks are positioning itself. You know, because the decentralized market will always follow, okay, centralized asset classes. So gold futures is the leading indicator for gold spot. Does that make sense? You know, so when you sometimes feel like you keep getting stopped on gold, or you don't understand gold's movement, it's because you don't understand session inventory transfers. You know, you don't understand how it takes multi-sessions to, you know, squeeze price before it explodes. But that explosion is just a, you know, just a setup for the next day or next week. So yeah, I mean, I think you get the gist. You know, you understand why session inventory is important. You know, I first started with the whole Asia and London inverse, you know, but it's a hit and miss, Asia and London, or even London and New York. So I implemented Delta, okay, which allows me to understand if London is going to deliver that inverse or not, okay. If there isn't Delta, then London is not going to deliver the move. Does that make sense? So for example here, Asia and London inverse, yeah? There isn't any London Delta, so London cannot be the delivery session, okay. Pass that responsibility over to New York. We have London and New York inverse, but New York needs to first and foremost go into discovery, which is inheriting London's long inventory. And that's exactly what happened. And then he needs to print Delta. So New York prints Delta, okay, after completing that discovery, because you know that was inherited from London's long inventory. So this is cancelled. Asia and London is cancelled. London passes over to New York at 1400. Everything resets. Okay? It all resets. Now it's London and New York inventory transfer. Does that make sense? Look, I'm going to show you an example here. You've got Asia and London inventory transfer. Now, London needs to go into discovery first. That discovery happens, you can see over here. London inherits Asia's downside push, so short inventory. Inherits that, sets itself up over here, or you can even draw a box or whatever. Sets itself up, discovery complete. Okay, so London is still in discovery mode because there wasn't any Delta printed. Delta, in a nutshell, is basically, to put it into simple words, it's when a session has the liquidity required to clear previous session inventory. Does that make sense? So for example here, yeah, you've got London and New York inverse. Delta needs to be printed. Delta is printed 1645. So we have liquidity to clear London's inventory. Okay, but London's inventory has already been cleared. London cleared its own inventory. Over here, 1, 2, that's the first high. Breach 1, breach 2. All of the excess push to the downside was inventory being cleared on behalf of Thursday's London session. Do you remember when I first mentioned, I said, look, Thursday, unresolved inventory left behind. So London clears that. Then there isn't any inventory left to balance. This is all push back above the first high. So now the question is, does New York need, is New York going to use this Delta to push lower and clear London low? It's not going to use it because there's no liquidity, there's no There's no inventory left behind to clear. So what New York would most likely do, and I'm gonna tell you right now, you'll pass over to Asia. If the low doesn't get cleared, it's gonna be New York long, right? Low and a high. When Asia opens, Asia can do two things. Respect the low left behind by New York. Okay, so it's gonna be something like this. And there's a reason why I've marked out, look, there's a reason why I mark out highs and lows. Blue, Asia, red, London, black, New York. Look, when New York passes over to Asia, it changes everything. Now you've got New York and Asia inverse. Once Asia clocks in and Asia realizes there isn't any inventory to resolve, now the foundation of learning, the standard session low, standard session high, can be used, because now you can rely on your classic standard NY low, and you can actually take longs into discovery, because in which direction is Asia's discovery going to be? Obviously to the upside. Long New York, Asia inherits New York's long inventory. Does that make sense? It should make sense. I don't trade off session high, session lows, but when they do make sense, I do use them, and they only make sense when you've got a protected level. Okay, so that's where the whole protected levels and key levels come into play. New York low becomes a key level after that, and with key levels, the majority of it's either make it or break it, so that's how you, same over here, session high, NY respected London high, because there wasn't any ups, there wasn't anything left to clear at that given point, anyways, that's a different session high. But yeah, session inventory transfer is important. This will take you very far, and you'll actually learn more about yourself as well, because it keeps you engaged with the markets. It allows you to carry on with your day, or sleep during Asia, go to the gym in the morning, come back to the charts 9:30, 10, prepare for London, allocate risk, get involved, close 90%, 80%, whatever, come back, allocate more risk, because it will make sense, and you can swing these trades. You can hold, hedge, add shorts to your longs, hold your longs, add shorts, and then prepare for the next session or multi-session, whatever it may be, So that's how you should be navigating in the markets, by understanding which time frame is in play. Is the H4 in play? Do we have any upside breaches pending? Any upside discovery pending? And if so, am I going to be able to read that through the 15-minute time frame? And then you can introduce yourself to the volatility index. I've actually been tracking the volatility index for the last God knows how many weeks and months, but price has been building. Blow off, squeeze, risk off, and guess what? Healthy trend, while risk off liquidation has been happening. The majority of the sessions, they've just been liquidated. But at the same time, certain sessions, for example, London, Friday, healthy trend. London, Thursday, healthy trend. London, risk off liquidation here. Okay, so you've got a risk off liquidation, and then you've got a healthy trend. Do you see how both of the sessions, Thursday and Friday, remained above the risk of liquidation. After that, it's a decent carry, But yeah, I'm not really gonna go into the more in depth of how it really works behind the scenes. I'm already tired as it is. It's been a long day for myself. But yeah, we move on. I thought I'd just check in and just drop a few pointers here and there for all of you to digest and see if that helps you. Get yourself involved on my Discord handle. Get yourself involved. I'm sharing some good news. Asia longs. New York longs. I'm sharing some, and I'm sharing my losses too. I'm sharing my losses too. So I'm very open with my wins and my losses. And I'll be sharing the ancillary the case studies over here in the premium arena. Please do so. Get involved. Get the right information, which will allow you to, make the right call. And at the end of the day, I just want all of you to win. And just be a tier 1 operator in this game. Because you are the institute, You are the institute, my friend. Weekly on gold is so beautiful. Don't get me wrong, We've got the first low, 1, 2, breach 1. That breach 1, break above 1, 2, we can fly into 500-600. That's 10,000 pips. So I'm gonna leave it there. Do have a lovely weekend. It's bank holiday tomorrow. London session may be slow, but apart from that, cheers to all of you. And yeah, I'll leave the link for the Discord handle in the comment section or in the bio, wherever I can. It's on my IG story anyways, on my IG bio. And yeah, cheers to all of you.